Hello and welcome to this week's edition of Midweek Market Drivers. Well, a huge drop in oil prices as well as ongoing scares surrounding the coronavirus continue to affect markets around the world. To find out what we can expect to see next, let's speak to Bob Mason from FX Empire. Hello Bob, thank you very much for joining us. It's always a pleasure to speak with you. Let's jump straight in, shall we? We just experienced a drop in oil prices unseen since the 1991 Gulf War. What caused this plummeting of oil prices?
What a week for crude oil prices. We saw the markets tank on Monday with 30% drops in WTI and in Brent. That came off the back of news that OPEC and Russia talks collapsed at the end of last week, with the Saudis cutting prices for April and expected to ramp up production in what's becoming a price war. Markets in the news are calling this an OPEC-Russia war. It's really a battle against US shale producers, however, who have continued to crank up production, offsetting the efforts by OPEC and Russia to deliver price stability and a balance in the demand supply for crude oil. Obviously, the impact of the coronavirus on demand is quite dire. So OPEC and Russia would have been looking to cut back production to support prices. But with US shale producers waiting in the wings to deliver more, obviously there's little point in doing that. So then hence the price war. And the Saudis are not able to go head to head against the US for obvious reasons, for diplomatic relations. So pointing towards Russia and a price war makes much more sense. Mm-hmm. Saudis have got a long way to go before they start feeling the pinch from a slide in oil prices, with production costs at less than $10 per barrel. It's a different story for Russia, but really it's US shale producers that are above $20 per barrel that are going to hurt the most should we see oil prices fall to below 30, which could be on the cards. Should we see the OPEC-Russia war continue, it's really a war against the US, but let's face it, let's call it OPEC-Russia. We've seen early support, however, and that's coming off the back of expectations of fiscal support by governments such as the US. Reality check, though. Will US consumers be out driving around if there are shutdowns by state and obviously a material spread in the coronavirus? Unlikely, which suggests a material slide in demand, and Trump could cut taxes and all the rest of it to drive consumer spending. But if people aren't out spending, it's not going to make any difference, which suggests there could be more downside to come.
Another hot topic recently, Bob, are the equity markets. Stocks are plummeting in Europe and the US. Who or what beat down the stock markets?
Been a mixed week for the markets. Obviously, Monday was the meltdown that we saw the majors fall by the largest amount since the global financial crisis. Quite a dark day. We saw crude oil prices tumble by as much as 30% off the back of the price war that's expected between OPEC and Russia. But though the market pullback was less to do with that, and actually more to do with the spread of the coronavirus that continues to haunt the markets. We saw the US markets rebound, partially recover on Tuesday. That was in response to the promise of support by the US administration, though the lack of delivery by the end of day on Tuesday led to a late pullback, limiting its gains on the day. European markets were less fortunate, in spite of Italy's government deciding to open the coffers that are largely empty when you're considering debt to GDP to offset the effects of the virus. Equity markets are in a dire state for Europe. Obviously, the majors are in bearish territory and are unlikely to recover anytime soon. We've got Germany and Italy, the EU's largest manufacturing producers, obviously under the hammer. And when you consider the shutdown and the spread of the virus, the impact on consumer spending is also going to be quite dire, which suggests that the ECB's hope of consumer spending to offset the downside from manufacturing sector activity is going to be lost near term, which points to ECB support at least, and that's before we even consider support from the government. So for the US markets, futures are pointing negative on Wednesday morning. That's because the markets are waiting for the US administration to deliver. We're still waiting for member states of the EU to deliver. It's too soon, really, to start throwing in the kitchen sink. We don't even know how much damage there's going to be from the virus, which is yet to stop spreading. So there's a lot left to go, and there could be more downside to come.
Meanwhile, Bob, how is the impact of the coronavirus being handled by the world's major economies?
What a week. And obviously the coronavirus has seen governments handle things in very different ways. In Italy, we're in shutdown mode, with the Italian government looking to crank up spending to offset the effects of the virus. Obviously, shutdown means no consumer spending or limited at best. So how that's going to affect remains to be seen. But the EU's second largest manufacturing country is really going to have a dire first quarter and likely second quarter. Over in Germany, we're seeing the spread continue as well, which suggests more doom and gloom for the EU. Obviously, Brussels is allowing governments to increase spending and breach the laws on debt to GDP. The big question is how they're going to recover once the virus ends and obviously things go back to normal. Obviously, it's not going to take months for economies to reverse the increase in debt. So that's going to have a material impact, and we can see ratings, come into play as well. So yeah, Italy and shutdown, Germany not yet. The likes of Israel have closed borders, and obviously now people are now being required to enter into 14-day quarantines should they enter the country. In the US, we're seeing the spread widen and National Guards come into play. We're not seeing states shut down yet, but really, if you consider the size of the US and the size of China, the US may have little choice but to begin shutting down states and borders to contain the spread. What's really surprising is there's no lessons learned from what happened in China, and it took some time for Italy in particular to shut down its border. EU ministers had met a few weeks ago and agreed that there was no real need to close down borders. That looks like a wrong decision to me and for the markets, and obviously that's contributed to the downside in the European majors. Obviously, the euro's on the front foot. That's carry trades unwinding. That's going to have a material impact on the economies as well. So fiscal policy, Italy's on the move. They've been wanting to do that for some time. Coronavirus delivers the opportunity. Question is, will Germany follow suit? Obviously, we've got Britain in focus today. The government's going to deliver its budget, and there's going to be a big move to counter the effects of the coronavirus in the UK, which is also spreading. Governments are on the move. The spread is also continuing, however. So it remains to be seen whether fiscal policy and monetary policy support will be enough.
In the meantime, Bob, just to finish up, we're hearing rumours that the ECB may cut interest rates into the negative zone. Any comments on that?
So ECB's in action on Thursday. We've seen the Fed cut, the BOC and the RBA deliver. Obviously, the PBOC's been in action. So will the ECB deliver? Lagarde had spoken a couple of weeks ago saying until there's deflationary pressures, there's going to be no move. That's in stark contrast to Vice President of the ECB, who just spoke a few days later after Lagarde saying the ECB was ready to move. So the markets are hung on whether there's going to be a move or not. We're pricing in a cut in the deposit rate to minus 0.6%. Is that really going to affect the euro? Probably not. Carry trades are unwinding. We've seen the euro hit 1.14 levels before easing back to 113s. But that upward momentum could continue should the spread across the US accelerate and the US go into shutdown mode in key member states. So is the ECB on the move? Yes. I think they've got little choice. They need to rein in the euro. So deposit rates are unlikely to be enough. They might need to cut interest rates to zero or even negative territory. If they don't do it tomorrow, on Thursday, they will be talking about it. But Lagarde's, going to be forcing member states to obviously open up the coffers. She spoke about that in her first press conference. So I expect more pressure to come from the ECB. Obviously, Italy's already on the move, but they want the likes of Germany to do the same. So deposit rate cut, quite likely, that's priced in. We should see an interest rate cut as well to at least zero, but they may hold off tomorrow and deliver that next time around. I think the ECB will want to stand pat on that and sit back and wait to see what actual impact the virus has on the economy and on inflation in particular.
Bob, thank you so much for speaking with us today. It's been a pleasure as always. And thank you so much for watching this edition of Midweek Market Drivers. We'll see you next week.